Hello and welcome to Weekend Investing Daily Bytes. We're shooting this episode on 12th of April and another day when the markets went up. So just remember, few days back, less than 8 days back, everybody was so negative in terms of their outlook, and now suddenly in the last 8 days we've had eight up sessions, closing of Nifty each day above the previous one, and we've crossed some resistances. We've crossed, uh, you know, uh, even this previous high at 17,800 odd, and slightly peaking above it now. But the interesting thing is that despite this run up, while on very short term charts we are a bit overbought, but on a daily basis, if you see, the RSI is still nowhere near the previous peak. So we previously peaked at, at near 75 here, near 82, 83 here, near about 70 here, and about 70 here as well. So we are still some more ground to cover before we become that overbought as in previous times. But we never know. I mean, this may be the leg that can take us, higher to new highs. So very good price action in the last 8 days. It's sort of a release valve that has opened up, and a lot of folks who were sitting on the sidelines already starting to feel left out. And if this continues for some more time, that FOMO will start to come back again very, very quickly. Nifty heat map, majorly you can see here that FMCG lost some ground here, mostly corrective in nature. Power stocks and infra stocks lost some ground. Bank stocks were muted. IT stocks came back a little bit after the bashing yesterday. Steel stocks were muted, but Bajaj Auto, Eicher Motors, Tata Motors did very well today, along with some pharma names. So pharma has been remarkable in today's move, and I will talk about it more later in this episode. As you can see, the sectoral overview: 2.23% move on pharma, largely driven by Divi's Lab, which was up nearly 9 to 10%. IT stocks making a comeback at plus 1%. Auto stocks also up nearly 1%. Nifty gaining about 0.5%, and the sectors that were uh, soft today were PSU banks, FMCG, public sector enterprise, and energy stocks, along with infra stocks. So this was the makeup of the sectoral overview today. Real estate was muted, although on a weekly basis, real estate has done the best over the last 1 week. Over the last 1 month, pharma has done the best at 7.6%. So a lot of times, very those sectors pop up which we were not expecting them to, but that's what momentum is all about. That you need to chase stocks that are doing well recently. Mid cap index also doing quite well, well above the resistance line now, cruising above it. I think we are very close to now, going and testing this previous high here. Small cap index also a bit muted than mid caps, but still managing to, eke another day of gain. Maybe in a day or two, we may have some few days of consolidation, somewhat like what we had somewhere here, when market had run up and 2 3 days of consolidation here, then small run up, 2 3 days consolidation here, then a small run up. That's the way usually market will go up. So this 8 days of gain will get some resistance at some point, but good formation on that front. And Nifty Bank, as I've been mentioning, is probably one of the best out of all these indices, cruising very well along, very near the previous tops of 41,500 and 42,000. Once we do break out 42,000, I think the coast is then clear for a new high. This is the list of pharma stocks that did very well today. So you can see Divi's Lab nearly 10% up, Laurus Labs 7%, PPL Pharma 5%, Biocon 3.5%, Aurobindo Pharma, Wockhardt Pharma, all the big names doing quite well. Few losers here, but largely I would say Pharma really did very well, having been underowned for some time, and some price action seems to be coming back here. So today's stock that we want to look at is SUNPHARMA. You can see here that since February, it made a high of 1,070 and dropped down to 949. It has made a very nice rounding bottom pattern in this particular time frame. It is very near its resistances of 1032, between 1016 and 1032. So I'm assuming that once it is able to break out from this 1022, it may target 1032 or 1070 also in this move. So a very nice rounding pattern, and rounding patterns are very, very strong patterns for continuation on the upside. When they do make this kind of rounding pattern, it almost usually means that all the negativity has gradually been phased out of this stock, and the bulls are now building it back up. If you notice that the run up started much before the market started to rally. So this is also a reasonably good sort of a setup for Sun Pharma. This is all I have for today's session. Let me quickly go see if I have any questions. Let me pull up my question list. Please let me know your questions. I don't have any questions right now, but I'll wait for a few minutes to see if you have any questions for me. I'll meanwhile just present to you my chart screen. And let me also show you where what we're watching is the dollar index, because that is very, very important when it comes to what is going to happen in the emerging markets. So this is, I would say, one of the most important charts out there, where you could argue that once the bottom gets taken out nearly at about 101, there could be a huge rush of capital towards emerging markets, and towards precious metals, the risk on trade, and we can probably wait for some more time. Maybe by the time the Fed meets again, uh, we may be very close to it. So it's going to be a very decisive move once we do break down, if we do break down, and I think that will seal the fate of where our markets are going in the short and medium term. The yields on the US 10-year are also have been coming down, so that is another sort of promising chart here. You can see that from, let me just not go logarithmic on this. You can see that the yields were rising from the bottom of COVID, went all the way to 4.35%, and in the last since October 22, we've sort of been in a range, but very near the bottom edge of the range here. So this also looks like the market is telling a story that the yields are not going up further. The Fed may not be able to hike any further. That itself will be a great news for equity markets and asset prices in general. Uh, Pradeep Raj has a question. Do you think the worst is over for the market in the short term? I wish I knew the answer to that. I think nobody does. But from a perspective of, if we see a slightly longer perspective, let's take a monthly chart. If you see this chart over the last few years, it is very evident that the market is not willing to go down. Market is consolidating, but it is not willing to go down, and that is a very, very strong signal that the market, despite whatever recessionary calls and the higher interest rate that has come around in the last many quarters, has not budged at all. I mean, we were at the same nifty level in September 21, and a year and a half later we are exactly the same there. So this is essentially a time correction that has happened, uh, and some price correction also had happened in the first 6 months after that. So I think this is a very, very bullish chart from that perspective, unless there is some new bad news that comes around from the global markets. I don't think we are in any kind of a trouble here. This is a beautiful chart. Just, you know, if COVID was had not happened, I mean, you would have still had the same trajectory. I mean, if you see the trajectory of the Nifty, it is actually, you know, sort of similar trajectory that it has been carrying on for the last 10 years. So this is our natural sort of trajectory that we had, and we had an aberration year here. So and of course one in 2008 also. So from that perspective, we may be at, you know, the reasonable or fair sort of situation where we are neither too you know, there's not much of fluff in the market, neither is the market too depressed. Harish says, any good stock in small cap? So I'm sure there are tons of stocks, you know, in small caps which are doing very, very well. I will not be able to recommend any particular stock due to our license issues. But what I would suggest is you look at price action on small cap stocks. Look at where the price is telling you a story that, you know, the stock wants to go up. Don't look for falling knives. Look for stocks that are going up. This basic change of thought process of not looking for stocks that are dropping but looking for stocks that are going up, that itself will change the dynamics of your portfolio. That's my belief. Because when stocks are going up, especially in a market where which has been stagnant, the stocks themselves are telling you that there is something beyond, you know, what is yet to be recognized in the market, and the price is telling you that. That's why we, you know, follow the BBC principle, Bhava Bhagwan che, is that the price is telling you that the stock wants to go up. Follow the price, have stops, have protective, you know, take bets which align with your risk management on that trade. But look for strength, don't look for weakness. That is the conventional wisdom of, you know, buying low and selling high. But what you need to do is to, you know, buy high and sell higher. That is the way of momentum investing. And I can tell you, whether you will believe me or not, but momentum investing beats all other formats of investing in the long term. There have been, you know, 200 years of data and research on this. Ravya Jain says, is it better to look for high CAGR stocks like average CAGR of 30 for the last 3 years? So again, the same point that I was trying to make is that maybe, you know, not the CAGR, because you could have lumpy returns in some years, but have some metrics based on which you are evaluating stocks. If you're evaluating, let's say, 50 stocks, I would think, you know, look at how those stocks have ranked in terms of their performance in the last 1 month, 3 months, 6 months, 12 months. And based on that, maybe you can make some, you know, a system out of how to buy strength, how to remove weakness from your portfolio. Rashmi Singh says, what is the best time to start SIP? So the best time was yesterday, but the next best time is today. So don't overthink about when to start investing. Start now. We have shown several daily bites where we have shown that even if you started at the very peak of the market in 2008, in 2015, in 2020, and if you sipped your way through for the next many years, it did not matter where you started. So don't try to time your entry into the market, because nobody, let me not say nobody, very few people can really time the market. And given that you will bring your capital over several years, the starting point really has no significance. In fact, if you are you know, unlucky enough to start at the top, that will actually make sure that, you know, the fall that comes after that will give you some very nice averaging on your sips. So it's actually lucky if you are able to pick the top for your first sip, in my view. Another one from Ravya Jain is Balaji Mines a good buy now? It has been touching Bollinger Bands. Let me just try to see if I have that chart here. So this looks like a good chart. I think they have the stock did, you know, fall quite a bit, uh, and you can definitely create a trade setup here. It did break out of this trend line. It did break out of the pivot here. So you could, you know, maybe if it comes to retest this breakout, you could buy here with a small stop. But it has run up a bit. So unless you want to chase the stock with tight stops, I would think that maybe some cool off maybe a good point to look at this. Okay, Resna Sugathan says, I'm holding Sun Pharma. Can I add more quantity now? So, Sun Pharma, as I mentioned in the today's episode, is looking very good to me. So, definitely this rounding bottom, especially below this previous lows, has provided support to this. So, definitely one can look for buying more, and maybe some resistance will come at this level once the market does touch here. But as of now, the stock does look good. You could keep stops somewhere near 975 if you like. Ravya Jain has another question. I want to understand whether you should exit a stock if it touches Bollinger Band and RSI moves over. So there is no one, gospel truth about how you should do entries, how you should exit. It is, and everything works. You can choose any indicator, you can choose any exit plan, you can choose any entry plan, as long as it has an edge, and you've back tested it over few years of data, and you stay in discipline with that strategy, it will work for you. So there is no one right way, RSI above 70, RSI about 75, Bollinger Band with different parameters, some moving average, everything can work. But only thing is you need to be disciplined about whatever is your system, and you need to have risk management. So proper risk management where any one position may not, totally destroy your entire capital, those kind of things. So position sizing, risk management, those are very, very important. Other than that, no particular indicator setting or no particular indicator is a holy grail. I think I've come to the end of my time. Thank you so much for watching this episode, and I'll see you in the next one. Bye.